Hi guys, today interesting topic. We'll be talking about combination of classic pivot points with Camarilla pivot points, and in this video I will be switching between these slides and real life charts. I will try this not to be boring presentation, but from time to time we will check slides, from time to time check some charts. Before we move on, I wanted to point out quickly if someone is new to pivot point trading, to make it easier, to explain it easier, this combination of classic with Camarilla, I will focus on reversal trading examples. But remember that with pivot points, we do not use these levels only for reversal trading. If some pivot level is broken, that's fine, maybe trend is strong and you should have your strategy, your system for that situation. And I talk about this in other lessons, so I won't be dragging this out. We move on with this presentation, but simply remember that when I'm talking about reversal trading here, it's not the only way to trade pivot points. First, let's talk why we combine classic pivot points with Camarilla pivot points. They were created in the 80s and since then they are pretty popular. You can find them in many strategies used by trading robots, bigger institutions, and of course when I say that they are used by bigger institutions, that doesn't mean that they based all their decisions only on pivot points. Obviously they use other strategies, other tools, Fibonacci and so on, but classic pivots and Camarilla are pretty popular since 80s and 90s, and they still play a role in decision-making process. Second thing is that these are two different calculations, so we have different formula for classic pivot points and we have different formula for Camarilla. Thanks to that, we have different levels. So we have levels from classic pivots and we have levels from Camarilla. And when these levels are close to each other, we have confluence. When we have confluence, that means that we have potential signal that there might be some reversal taking place. Let's check quickly one or two examples. Here you can see we have confluence of this will be R1. So this dotted line is R1 from classic pivot points and solid line is R4 from Camarilla. And this is our confluence level. This level is based on two different calculations from classic pivot points and Camarilla pivot points. This level is more important for algos and other traders. They pay attention to it and we have better chances that there will be some price reaction at this level or maybe even reversal. Here, similar story, we have combination of R1, so this is classic pivot calculation, and we have solid line which is R4 and this is Camarilla. So this area is a potential resistance for the price, maybe take profit target for the day, maybe some reversal later on, but either way, algos and traders pay attention to this confluence zone. So yeah, it's simple as that. We have two different calculations, and if levels from these two different calculations are close to each other, we have better probability that there will be some reaction from the price. Maybe reversal, as I said at the beginning, it doesn't have to be only reversal, maybe only take profit for a moment, some stop and continuation when trend is stronger. But traders and algos pay attention to these levels. And we as retail traders want to know beforehand where these potential levels of interests are. Let's talk indicator, how to use classic pivots with Camarilla on the same chart. I'm using indicator called Pivot Boss, and this is indicator for MetaTrader 4. As you can see, this indicator combines classic pivots with Camarilla and it displays pivots for the current day. This is indicator for MetaTrader 4. It's free and I will link it below in the description of this video. If you are using other platform, you can simply use combination of classic pivots and Camarilla on two different charts or maybe two different time frames. And since we are talking about indicator, two important things that I should mention. Let's talk about M levels quickly. Some traders are not familiar with M levels. In classic pivot points, we have pivot level, middle line, we have R levels above, S levels below. In the middle between pivot and S1, we have M level, next M level, next M level here, again M level here, M level here, and here. And this is for classic pivots. On this pivot boss indicator, you can see M levels over here. So these M levels are simply middle lines from classic pivots. Some traders are aware of them, some not, so I wanted to mention that. Second, let's talk quickly about levels in Camarilla pivots. In this indicator, you can see that we have solid levels, which are Camarilla levels, and we have S3, S4, S5, and we have R3, R4, and R5. Sometimes you can see that people mark these levels as L and H, but that's the same. That's just different names. And we also have levels first and second, and these are usually so close to pivot levels that they are not marked on the chart, and that's why we start with S3 here and with R3 here, because S1 and S2 are so close that almost nobody uses them. Okay, now you know why we are using combination of Camarilla and classic pivots. You know levels. So let's move to some cases, and we will talk about two different approaches. First approach is using confluence. Second one is usage of more layered approach. But let's start with confluence. When you see that there is confluence of two important levels, they are close to each other, that's your point of interest for the day. Here we have example of nat gas, and you can see that there was stronger sell-off which started the day before, and this stopped at this cluster over here. And you can see that we are talking about S4 from Camarilla and M line from classic pivot level. And later on we saw reversal up. You may wonder if these levels have to be close to each other like in that example, or there is possibility that there will be some space between them. Here we have level 4 from Camarilla and R1 from classic. For me it's still a confluence, little bit wider one, but I would consider it still important one. Another example from pound dollar. For me this is still a confluence, important one. If the gap is wide like here, that for me it's not important confluence. This is interesting example. This is confluence of third level from Camarilla and yesterday's low, and you can see clearly that price managed to stay above this area. So it's not like you only consider confluence between two pivot formulas. Sometimes you will see confluence with moving average, Fibonacci level. That's also important, but in this video we are talking about confluence of Camarilla and classic pivots. But still remember that that doesn't mean that you do not ignore other confluences. And here again example which I showed before, confluence classic pivots and fourth level from Camarilla. As you can see, usually price will react once or twice a day, not every day, but there is high probability that there will be at least some reaction at one or two confluences based on classic and Camarilla pivots. Sometimes the stop will be short, maybe some sell-off, small sell-off and continuation, and sometimes this will be the end of the swing move for the day and there will be some reversal move. Next, let's move to second usage. In this concept, we are using both systems, which creates a sequence of resistance and support. That means that we have resistance from Camarilla, we have resistance from classic pivot, we have resistance from Camarilla, we have resistance from classic pivot. That's it. Now, let's say that you wait for some reversal opportunity and you think that there is a good chance that at second resistance from classic there will be some potential to open a short trade. But of course you wait for some confirmation and there is none. Price broke through that second resistance, classic resistance, and that's okay. You check the chart and you see that later there is resistance from Camarilla just above this classic second resistance. Okay, now it eliminates guessing. You always have some next level to watch and you know where to watch closely for price action and possible entry based on these levels. And to be honest, it can be very useful. It takes time to learn how to think that way because we are combining levels based on two different calculations. But yeah, you will see on many times that there is some trap around one level, let's say classic second resistance or maybe even third resistance level from classic pivot points. Price go up and it eventually stops at fourth or fifth Camarilla level. As you can see, you have ready roadmap for the current day. You can see important confluences. If price managed to go there or here, or maybe even here or here, you know that there might be some reversal move or take profit opportunity. Or if you are using this layered approach, you saw that, okay, this M level was broken. What's next? Next is third level from Camarilla. If this level will be broken, we have classic S1 support. Later on we have this confluence. If this confluence fail, we have second support from classic pivots. And with good entry strategy, you can play with this information. At the same time, you can see that it's not that we simply open a short or long trade only because price is at specific level. The correct way is to have strategy, and in this case we are on 1 hour chart. You go to lower time frame and you search for entry on lower time frame. Let's say that I switch to 5-minute time frame, and you can see right away we have first test over here, this candle over here, and another test over here, nice pin bar. And with that confirmation, with that test, with that retest and pin bar after that, this was a good place to go long. Obviously, there is many strategies that you can use to open long and short trades, reversal trades with combination of this classic and Camarilla pivots. I just wanted that you understand how combination of these two different formulas can help you in your day trading. With Camarilla, you have different information. Camarilla from the start, from the beginning, was built to catch reversions from extremes. Classic pivots provides different information, possible resistance support levels, but also if these levels are broken, confirmation of current trend, and that can be super helpful in your trading. So let's sum this up. The trading day starts, you plot classic and Camarilla on the chart, you mark confluence zones, and thanks to that you know where can be a good take profit opportunity or maybe time to search for reversal trades. Okay guys, I hope that you liked this video. If so, please subscribe. I talk more about pivot points trading in my other videos. I try to cover some basic topics for new traders, but I also want to talk more about less known topics, more advanced topics. And yeah, I hope to see you again.